If Forex chart look confusing to you right now, don't worry, because most beginners open a Forex chart or a Forex app and see candlesticks move up and down, random line everywhere, and immediately you feel lost. But the truth is this, right? Forex charts are usually simple once you understand the basics. So in this 10-minute video, I will show you, right, how Forex chart works, right, what candlesticks mean, and how to spot buy and sell opportunities, and how traders read the market without guessing. By the end of this video, you will be able to open any Forex chart and actually understand what you are looking at. So number one, what is a Forex chart? Forex charts, right, it's a visual representation of price movement. It shows you where price has been, where price is now, and sometimes where price might go next, right? Every movement on the chart represents buyers and sellers fighting for control. Am I understood? So for example, if buyers are stronger, right, price move up, I'm understood, and if sellers are stronger, price moves down, and that is how it is. Think of a Forex chart like a battlefield between the bulls and the bears, right? The most common Forex chart are line charts, right, bar charts, and we have candlestick charts. But honestly, right, 90% of traders mainly use candlestick charts because they are easier to read and give more information. Understand candlesticks. Candlesticks are the language of the market. Am I understood? Each candlestick tells four things, right? Open price, close price, highest price, and lowest price. Bullish candle means when price is closes higher than it's open, usually green or white, depending on the color you choose. That means buyers were in control. Bearish candle, when price closes lower than it's open, the candle is bearish, usually red or black, depending on the color that you put it. That means sellers were in control. The bigger the candle, the stronger the momentum. And the more aggressive the buyers or sellers are. Now, small candles usually mean weak momentum, market hesitation, consolidation, right? Number three, time frame explained. Every Forex chart has time frame. This simply means how long one candle takes to form. Example, 1 minute candle forms every minute, and 5 minutes, that is one candle forms every 5 minutes, and 1 hour, one candle forms every hour. Daily, one candle forms every day. Beginners usually make the mistake of jumping into very small time frame, but small time frame, right, are noisy and stressful. Now, if you are new, right, start with 1 hour charts or 4 hour charts. These are cleaner and easier to understand. Now, professional traders don't just stare at one time frame, right? They check multiple time frames to understand the bigger picture, right? For example, daily charts, overall trend, while 1 hour chart, entering points. Number four, understand trend. In the market, only does three things, right? Goes up, goes down, right, and moves sideways. An uptrend happens when price moves higher highs and higher lows. This means buyers are dominating. Downtrend happens when price makes lower highs or lower lows. This means sellers are dominating. And sideways markets, this happens when price keeps bouncing in a range without clear direction. I'm understood. So this is where beginners lose money, because they try to force trade in sideways markets. Now listen carefully. One of the smartest things you can do, right, is simply wait for clear trends. I'm understood. Remember, the trend is your friend. Trading with the trend is easier than fighting against it. Now, number five, support and resistance. This is one of the most important concepts in trading. Support is an area where price tend to stop falling, right, and bounce upward. Am I understood? Now think of it like a floor. Resistance, in the other hand, is an area where price tend to stop raising and revise downward. Think of it like a ceiling. Am I understood? Why does this happen? Because traders react emotionally at certain price levels. Now, when price repeatedly repeats an area, traders begin paying attention to it, and this creates strong reactions. Am I understood? A simple strategy many traders use: buy near support and sell near resistance. Not every support, right, or resistance level works perfectly, but they help you understand where major reactions may happen. And that takes us to number 6, how to read market direction quickly. And here is a simple beginner trick. I'm understood. Ask yourself true question: is price making higher highs or lower lows? Or is price above or below support and resistance? Are candlesticks strong or weak? If candles are strongly bullish, right, and price keeps making higher highs, the market is likely bullish. If candles are strongly bearish and price keeps falling, the market is likely bearish. Now, don't overcomplicate trading. I'm understood. Many beginners destroy themselves by adding too many indicators, too many strategies. Simple chart reading is powerful. Number 7, common candlesticks pattern. You don't need to memorize 100 patterns. Am I understood? We'll just start with these simple ones. We have pin bar, a candle with a long wick. This shows rejection. Example of this candlestick is long lower wick. Buyers reject lower price. Long upper wick, sellers reject higher price. Now, engulfing candle, that is a large candle that completely covers the previous candle. This often signal strong momentum. Am I understood? So we also have bullish engulfing, right? Buyers take control, and we have bearish engulfing, right? Sellers take control. These patterns become stronger, right, near support, resistance, trend, continue areas like that. So smash the like button if you're finding value in this video. So this also takes us to number 8, indicators beginners should use. You honestly don't need many indicators, but these are two friendly or major indicators. We have moving average, right? This helps identify trend direction. If price is above the moving average, markets may be bullish, right? If price is below, market may be bearish. Now, we also have RSI, which is the relative strength index, which is also very, very helpful. Help identify overbought condition, oversold condition. But remember this, right? Indicators should support your analysis, not replace it. Price action always comes first. Number 9, here is the biggest mistake beginners make, right? Number 1, over trading. Taking too many trades destroy accounts. Number 2, ignoring the trend. Trading against strong momentum is very, very dangerous. You blow accounts and overblow accounts. Number 3, using too many indicators on your charts, right? And this really make your chart messy and confusing. Number 4, we talk about emotional trading. Now, fear, greed makes traders break rules, but all you need, stick to your rules. Number 5, not practicing. Reading charts is a skill. The more charts you studied, the better you become. Number 10, which is the final, and this is just the advice for the beginners. Don't rush forex trading, right? It's not about getting rich overnight. Your goal at the beginning is simple. Learn the charts, understand market behavior, protect your money, build consistency, and even professional traders still focus on basics like trend, support and resistance, candlestick behavior, risk management. Master the basic first before chasing advanced strategy, because honestly, most profitable traders you see today are not using complicated systems. Am I understood? They are not using complicated systems. They simply understand how to read charts properly, and this is really the most clear and amazing video you will ever see today. So if you find value in the video, don't forget to subscribe, turn on the notification bell, smash the like button, comment below, very, very important, right? Comment below, because in this channel I drop beginner friendly forex content, and I'm also inviting you to join my Telegram community. The link is at the description. If you want one-on-one mentorship, the link is also at the description. And see you guys in the next video. Peace.